Well, good morning, good afternoon, everyone. Really appreciate the opportunity to present RPD Energy, particularly for our European friends who are probably thinking about supper, especially on the back of Ashley's awesome presentation. Thank you, Ashley. By way of introduction, I'm Max Duckworth. I serve as the chair of the board of RPD Energy. We are a small, streamlined company. The board is fairly active, proactive. We are involved in strategic issues such as fundraising and partnerships. And again, I appreciate this opportunity to introduce the company. So very simply, we make it simple for US corporations, large institutions, and other significant energy buyers to procure renewable energy to help them achieve their sustainability goals. That sounds very simple because there is so much new renewable energy being added on the grid, both utility scale and distributed, but it's actually surprisingly difficult to ensure that those green megawatt hours end up in the hands of the end users who really desire them. So what RPD Energy is doing is really driving a market transformation on the end user side of the market. So this is a little bit of an executive summary just to set the stage. RPD Energy is a renewable energy platform, or think virtual green utility, that I will explain, that really makes it a lot easier given the lack of practical choices for corporations looking to buy carbon-free energy or CFE. We offer practical alternatives to power purchase agreements or unbundled renewable energy certificates, which are sometimes referred to as greenwashing. We're a market leader in 24/7 CFE solutions, where we actually match the hourly consumption of the end user with local physical renewable energy. We have a growing portfolio of nationally recognized blue chip companies like Adobe, Intuit, Iron Mountain, LG, a significant pipeline exceeding 20 million in contract value. We've been pretty thoughtful about outsourcing some of the large barriers to entry for a virtual green utility like RPD Energy. So all of the balance sheet requirements, all of the FTE requirements to participate along the green energy value chain, we've been able to outsource. And that also extends to technology and other things that allow us to continue to be a market leader in the carbon-free energy space. We are also well underway on a significant technology build-out, which is designed to ramp up business development, accelerate our sales cycles, streamline the actual transaction process, and ultimately create an industry-wide online marketplace for carbon-free energy. So the technology piece is one use of proceeds for our raise, which is 4 million or more. Moving along. So really just to kind of provide a little bit more of a contrast between RPD Energy's contract renewable offerings versus what's already in the market. On the left-hand goalpost, you have REC-only products where you can purchase unbundled RECs, sew them onto your brown energy procurement, and try and call yourself green. That is increasingly discredited. On the other side of the spectrum, your other choice is to buy power purchase agreements. These are very significant onerous commitments, typically 10+ years, where you're buying the output of an entire project in a way that's very much favorable to the renewable energy developer. So the analogy is really, rather than kind of signing up for a 200-page contract, which is heavily weighted towards the renewable energy developer, RPD Energy will convey a lot of the sustainability benefits of power purchase agreements, but in a typical contract that you're used to buying that is right-sized. It's got the term that you want, the volume that you want, and the delivery location that you want. So moving on, here's a snapshot of where the business is to date. we've moved over 2 terawatt hours of physical renewable energy across 40 different transactions with 9 customers. As you can see from this US map, we have done deals literally all over the grid. We also have increasingly attractive customer journeys with some of our customers. You can see multiple tiles in different parts of the map, particularly Iron Mountain. You can see in the right-hand column, we have continued to become an increasing provider of their overall net zero and climate objectives. Most recently in 2022, a few months back, we did the largest and most comprehensive ever 24/7 CFE deal in the marketplace. We work very cohesively with a lot of the very large players across the value chain, all the way from renewable generators, all the way through the end user, brokers, consultants, and advisors. It's a very harmonious business model that delivers multiple benefits, not just to the end users, but to literally everybody across the value chain. I'll spend a little bit of time on the tech build-out summary because this is very important when it comes to venture investors, understandably. We are working with Scoville Risk Partners, which is a leading energy analytics firm, to develop this technology, which will
1 minute warning,
which will be owned by RPD Energy. The 4 million raise that I'm talking about includes phases 1 and 2. Phase 1 is really an ability for end users and market participants in the US to understand the art of the possible when it comes to CFE. This will be a free service, certainly intended to raise awareness and ramp up business development and reduce sales cycles. Phase 2 will be subscription-based, where we'll actually allow end users to receive real-time pricing for different carbon-free energy structures that they're looking for. As I mentioned early, phase 3 is really the holy grail in a subsequent round, where we're going to look to really, through auctions or periodic offerings, take this to an online transactable marketplace. The 4 million use of funds is spread out across the tech build out that I've just described. We really want to kind of pour some fuel on the fire when it comes to existing products and ramp up marketing. Am I done, Matt?
Yes, your time is now up. I gave you a little extra time because we're
thank you. I really appreciate it. It's a very streamlined team, which is commercially and strategically focused because of the benefit of being able to outsource mid and back office functions to Axpo US, the American subsidiary of our Swiss-based partner Axpo that you will have heard of in Europe. And I think that really is probably it. Thank you, Matt.
What is the biggest challenge for buying green energy? It doesn't seem like it should be this hard. Why is it this hard? Why do you have to have a green energy virtual power company or power plant?
Yeah, so certainly when it comes to achieving your sustainability objectives, and I can quickly go back here, Matt, just to talk to the slide again. So on the left-hand side here, you can buy an unbundled REC, a renewable energy certificate that's created for every megawatt hour of renewable energy that's injected on the grid. That is being increasingly discredited in the renewable energy community, in the sustainability community. At the other extreme, power purchase agreements definitely work for the very large corporations and stewards such as Google and Walmart and Meta and Amazon. But for a large majority of the S&P 500 companies, the largest corporations in the US or other large institutions like academic, research, or governmental institutions, quite simply, there's no real appetite to sign up for 10 plus years and take the entire output of a new renewable energy project. So what we're really doing is making it a lot easier to sell renewable energy by the slice, taking green megawatt hours and the associated renewable energy certificates and branding rights, and conveying those in an agreement, in a contractual structure, which is how energy buyers normally transact when it comes to electricity.
There's so many like caveats and legal terms added into that. It seems so complicated just to buy energy.
You know, unfortunately, it is. But really, what we do, Matt, is we do a lot of the heavy lifting. When you think about everything that happens when your electricity flows from one of the renewable generators on the left through the wholesale market, through the retail market, and ultimately to the end user, we do a lot of the heavy lifting. We bring everybody together like a broker that structures products, and we essentially ensure that with a very simple contract that's only about 6 to 8 pages, the end use buyer is able to essentially receives a lot of the sustainability benefits from that green energy purchase.
Mm-hmm. And you've sold a lot of that green energy. How have you managed to get so much traction so quickly?
I appreciate it. Like a lot of early stage companies, it hasn't always been easy. We have been fairly nimble. We've had to pivot. But I think what's happening now, Matt, is that certainly in the US since about 2020, there really has been this sustainability, ESG, carbon commitment, net zero movement, which has been embraced by a majority of America's largest corporations, as well as other institutions, of course, including government. And so I feel like the tide has turned, and there's a lot more demand on the end user side of the market. And we're able to take something which you correctly identified as very complicated and condense it into a very simple contract that is how they normally do business and helps them get closer to their climate objectives. The other thing too, very quickly, is that when you're dealing with very large companies like Iron Mountain or Intuit or LG, there's a certain relief when they come back to you and say, not only do you want to do the same deal again, we actually would like to do a larger, more complicated, more sustainable deal, because that's really where we're heading as a corporation. And we really like the fact that you can work with us on this journey.
What's the business model? Are you getting paid on that recurring basis, or is it just the project or just the kind of upfront costs?
Yeah, great question. And I should have mentioned that in the 5-minute pitch. So we are so much more than a broker. We do a lot of the structuring, the architecting. As I said, think of us as a virtual green utility. At the end of the day, we are paid like a broker. So we do receive a fixed unit margin for every megawatt hour that flows over the course of our deals. And the good news is that we're dealing with high credit quality companies and other counterparties along the value chain. And our unit margins are insulated from price risks and volume risks and any other risks that occur in the industry.
So there's no recurring revenue then?
There's no recurring revenue from a SaaS perspective, although phase 2 of our tech build out has a subscription element, which is certainly intended to drive us in that direction. I should also point out that we recognize that there are many smaller energy buyers out there in the US, and we define those as having a load or demand of less than 1 megawatt. And so what we're in the process of doing here, Matt, is launching a platform in collaboration with Edge and Axpo and Freepoint, which is going to really it's going to allow smaller buyers to benefit from the power of aggregation and reduce customer acquisition costs so that they can buy this carbon-free energy through this platform. And the idea here is really from a business standpoint to drive higher frequency, more commoditized, lower touch deals and get closer to recurring revenue, Matt.
Understood. Turab, do you have any questions? What are the next stages in the company's development? What are the goals they need to hit, not just for a Series A, but is there a Series B planned? Where do they plan to get to in the next 3-5 years? What's the money actually going to go to?
Yeah, absolutely. So as we touched upon, this raise is about the tech build out, where we feel very good about the blueprint in terms of milestones and timelines and costs. That will take us through phase 2 of the tech build out. We also want to really kind of amplify our marketing and business development, given that we now have significant tailwinds, because even large sophisticated corporations in the US with significant climate goals don't always know how to go about that. So there's a real opportunity in the next 12 to 24 months to significantly expand the portfolio. We also want to continue to be right at the forefront of carbon-free energy procurement and continue to develop new products. For example, products in regulated markets in the US that would allow us to cover a greater geographic territory.
And what do you see as the biggest risk in the business?
I think the biggest risk in the business is it's certainly commodity prices. The fact that last year, certainly in Europe and to a lesser extent in the US, we saw a very significant increase in prices, which was mainly geopolitically driven. That's generally not a good environment for this business because it makes corporations that are price sensitive less likely to pay a small premium for these carbon-free energy solutions that are very helpful for their sustainability objectives. That having been said, we did have a record year when it came to new total contract value that was originated in 22.
Have you pursued reducing the kind of commission fee and having a recurring revenue basis, or is that just something they don't want to explore because they would be long-term and lots of money?
Yeah, that's certainly something that we're thinking about, Matt, and we don't have time now, but if you have any ideas, I'd love to pick your brain offline, because we're also beginning, even though we're not a consulting shop, we're starting to monetize that very early part of the deal cycle, where, as I said, you have corporations with very ambitious climate plans, which is fantastic, but they really don't know where to begin. And so that first part of the deal cycle can be fairly lengthy. We've looked to try to monetize that. And certainly the tech platform that I quickly touched upon, especially in phase 1 and in phase 2 where they execute, this is intended to really accelerate that period.
And the team is lean. Who do they need to bring on, and what are the weaknesses of the team currently?
Yeah, absolutely. So it is a lean team for the reasons I said. We certainly need to bring on more business development in direct channels where we're communicating with the end user, as well as indirect channels where we're communicating with retailers and brokers and consultants. On the tech side, we're fortunate to be pairing up with Scoville Risk Partners, a leading energy analytics shop in the US based just south of New York. So I think we're going to be in pretty good shape on the tech piece, but yeah, I think it's mainly going to be marketing and biz development, I think, from here, because we have the structure and the expertise, and we already have the relationships along the value chain.
What about the fundraising?
Matt,
oh yeah, go ahead.
Sorry, Matt. I was going ask Max, I was going to ask you just a question. I think one thing that I'm a little bit curious about from your presentation is I'm curious, like, sounds like I would think that everybody wants to get their hands on as much renewable electricity can for the longest, for a long term. Seems like what I think what you described on one of the slides was that you guys are looking to sell kind of medium term energy. And so I'm kind of curious, could you comment a little bit of like the market for that or the demand for that, gearing more towards kind of medium term or shorter term rather than the long term securing of clean energy?
Yeah, thank you, Tarab. That's a great question, and I'll try and make my answer concise. So typically, for large corporations that are procuring electricity and other commodities and other inputs to their production, they tend to align the term of those deals with their business cycle. And typically, what we see is 1 to 3 year contracts. The idea being that then you're not locked into the same structure and the same price for too long, in case business conditions and the overall environment change. The challenge with power purchase agreements, as we've seen in the US over the last 15, 20 years, is that corporations or the off-takers, the buyers, are locked into the same structure and price for very long periods that not only extend well past their natural business and budgeting planning cycles, but also can't possibly take into account topographical and dynamic changes in the transmission grid, where a data center's going, where a Bitcoin mine's going, where a vertical farm's going, where a renewable's going. So literally, if you sign a new PPA today for 10 plus years, you're actually locking in and exposing yourself to very significant shifts in prices based on factors that you can't possibly predict today. So this medium-term contract that we're offering is intended to be a sweet spot. We can go as short as 2 years for folks who want to be more retail-like. But if companies really like the current pricing environment, and this is a simple transaction that doesn't add additional risks onto the business, then they're going to do a deal with RPD Energy over the medium term. The longest deal we've done to date is 8 years. The typical duration of our book, of our portfolio, is about 3.5.
Okay, that's helpful. Thank you so much.
Thanks for the question.
And if you guys fail, why will it be?
If we fail, I would say, Matt, succinctly, and given that it's nearly dinner, it's because we couldn't sell the hot dog. It is a great hot dog based on customer testimonials from Intuit, REI, Iron Mountain. You can see that Iron Mountain has chosen to do progressively larger and more sustainable and beneficial deals with us over time. So if we fail, it's because we couldn't sell the hot dog.
So they're already eating your hot dog and they clearly have the money to do the investment. Why haven't Iron Mountain done the investment?
Investment in
RPD. You guys are looking to raise money. You've got a signature client.
Yeah, I see. Yeah. So there's kind of a running joke that we are the energy procurement arm of Iron Mountain, and again, tongue in cheek, because they have some great folks there, like Chris Pennington and others. But at the end of the day, we have had interest from corporate strategics, certainly, and I should also mention that about 12-15 months ago, the company received an unsolicited offer to be acquired from a very large renewable energy player in the value chain. The board was very flattered. It ended up being the right deal at the wrong time. So I think there's certainly a decent opportunity for the company to be acquired in the next 1 to 2 to 3 years, particularly if we can execute on the plan and it makes sense for somebody to bring us in-house.
If that's the case, then why would a VC invest who's looking for much larger returns? That makes things much more dangerous, so to speak, for them, because they're not going to have a big upside, but there is plenty of risk that it doesn't materialize into something larger.
Yeah, I mean, I think certainly the organic trajectory where we have pretty good visibility here in 23 and 24 based on repeat business as well as the pipeline of new customers. There's plenty of upside here in terms of IRR or ROIC or whatever the right metric is. I was really just speaking to the fact that VCs would also want to know what is the exit strategy. And when you think about the fact that we have low OPEX, we're very streamlined, we have a dedicated tech partner, we have Axpo US, which handles all of our wholesale services as well as our mid and back office and balance sheet. This is a company, RPD Energy is a platform that's pretty easy to bolt onto a larger host.
Understood. Any last questions on your side, Tarab?
No, not low last. I think the only comment I would make is kind of going to your point, Matt. I think I'm kind of curious whether VC partner for this kind of a business. I think there's a little bit more kind of, first of all, I think a little bit more of a operational play here, a little bit more of a kind of a customer relationship play here. And I think speaking, I'm kind of curious, like that scalability and returns would be there for what a venture capitalist is seeking is versus somebody that's a little bit more inclined towards operations, something that maybe from the financial side, something that's a little bit more of a PE type play, or
M&A,
or otherwise otherwise Matt pointed out an player from a bigger player in the space.
Yeah,
that would be.
But anyways, that's just food for thought.
No. It's very quickly. No. Thank you for the feedback, and your points are very well taken. I didn't hear everything, but to one of your points, Tarab, I think it's fair to say that we are well past the proof of concept stage. When you look at the Iron Mountain journey, we have something similar with Intuit and others, and the fact that we have contracted over 2 terawatt hours of physical renewable energy life to date. That's a pretty significant volume. But we do recognize the need to tech enable the business, which is why we'll be launching our Edge platform to get closer to SaaS revenue. And we're also feeling pretty good about the blueprint for phase 1 and 2 here of the tech build out, which will also bring SaaS revenue because phase 2 will be a subscription service. But really appreciate that feedback, which I'm happy to take on board.